What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 19th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we're going to be talking about a very important topic for Bitcoin investors, and that has to do with understanding how to know when the market has still more room to go down or might finally be ready to start moving up higher in price. You know, a lot of people like to share different predictions and different thoughts on where the market's going, but a lot of those traders and investors don't have a fixed strategy on looking for the signs that are going to tell them when it's time to buy or time to continue holding off on the sidelines and potentially selling their positions. So we're going to be talking about what some of my tools are here and what I watch for here on the channel. If you like this video, consider dropping a like. Let's go ahead and kick things off. Now, I want to be the first one to say here, guys, before we talk about anything, we're going to be diving straight into it. I just want to make it clear here that I'm not perfect as a trader and investor. I can look back over the last 11 plus years of my investing journey and point to many times where I didn't have a strategy. Maybe, for example, I had a strategy, but I didn't follow it. There are a lot of people out there, and I think any humble trader, especially the legendary ones, will tell you, even they have broken away from their strategies, chasing an opportunity, or simply getting caught up in the bias. Usually, especially when you're holding a position, right? When you're holding it, you fall in love with it. These are the kind of things that happen commonly. And if they've happened to you, it's nothing to be embarrassed about. It's something just to become self-aware of so you can become a more profitable investor and trader. Simple as that. There's no shame in it. We're humans. We got to learn how to work with ourselves here. And sometimes we will have blind spots. So let's go ahead, and I want to go ahead and talk a little bit about some of the strategies I've used in order to come out on top here during these more darker periods, because I haven't traded through one of these exacerbated potential bear markets, maybe a 50% correction in the stock market, but I have traded through 80% Bitcoin corrections, through 2 bear markets now, and on top of that as well, I've been able to navigate multiple what I call mid-cycle corrections in a decade-long secular bull market in equities. So I've seen these kind of corrections in action, and there are a few key things that I really think are some of the signs here that I'm utilizing within this bear market for Bitcoin to know when it's time to go long. Because right now, price is giving us a lot of fearful signs. As we've talked about, we've had these lower highs here in price. We've had a consistent support range. This is very, very similar, as I'll echo as I've done before, this is very similar to the pattern we had here back in 2018. Now, could it be different this time? Absolutely. And I want to make it very clear that just analyzing price alone is not enough here. We've got to take a look at a couple different metrics. And the best ones for me personally that I really like are the ones that originally served as a point of support or a positive narrative during the bull markets, because those same indicators that signal risk-on activity during a bull market usually work in the opposite direction and serve as resistance or continued signs of fear and weakness in price. So let's go ahead and talk about some of these. Now, these are not the end-all be-all indicators, but these are the ones I like right now, and I think play a very good role in determining whether or not, hey, the bulls are ready to take that charge and the bears are weak, or that we've got more pain to come. So first off here, I want to go ahead and talk about the 200-week. Now, I know this might shock a lot of you here that I'm talking about the 200-week moving average. I'll go ahead and pull this up to the all-time history index here. But the reason I want to pull up the 200-week moving average here is because of the simple fact that this indicator usually for Bitcoin is a screaming buy signal. If you look at any time throughout history here, the 200-week moving average, when Bitcoin goes below this range, it is one of the best ranges to usually dollar cost average or buy the dip, essentially, especially if you've been sitting in cash on the sidelines. Usually it's time to go all in. But there's an important catch right now. Remember what I talked about earlier, how bull market indicators, right? And I really like to make an argument here. I think we need to take a step back before I explain this. I am making the case here that this entire move, even with these 84%, 86%, 82% potential corrections, right? These typical bear market corrections that Bitcoin has had throughout its history, even the 93% one back here in 2011, this was all one big secular bull market. These were nothing more than equivalent to the mid-cycle corrections we get in equity markets of 15 to 30% that many people label as bear markets or short-term bear markets. Essentially speaking, over that period of time, throughout all of Bitcoin's history, Every time price came down to that 200-week moving average, it didn't live there long. And that's why it's usually a bullish indicator. However, this time around, we are not seeing buyers coming in at the 200-week moving average. We not only dipped severely below the 200-week moving average and the 200-week exponential moving average, the orange line on our chart, but comparative to the other times, these moving averages are now acting as resistance for price. It's starting to hold down price rather than serve as a foundation for it to propel higher, right? Now, I'm not saying it needed to bounce exactly on top of the 200-week moving average, but ideally, we should be seeing buyers driving price out of it. Instead, we are seeing a clear downtrend. Now, look throughout history here. Do you see any period of time that had similar price action here to the dip below the 200-week moving average? Usually, it's swift, it's quick. People use this as an indicator to go long. Right now, we are not seeing that here. We are seeing extended weakness below the 200-week moving average. So that for me is a great sign here. Again, while I love Bitcoin and crypto, and trust me guys, I would have every incentive in the world for the market to go back up. Our main focus here is crypto, right? I would love to keep my audience. I want to keep you guys interested. And I love crypto as a technology. But I gotta be honest with you, as a trader, I don't like this setup here. I don't like seeing price below the 200-week moving average. This means that Bitcoin has consecutively been trading at a price that is lower than where it was for the previous 200 weeks at the time of that candle printing on the chart. That is not good to see. And now, along with that as well, another thing I like to look for here is previous history here. Now, again, one of the great examples that I like to look for is during Bitcoin, for example. And at my TA analysis for its price, I like to look at what's the typical correction for Bitcoin, right? Even if you guys don't believe my concept here, let's say I want to play more of a kind of middle ground scenario. Let's say I do believe Bitcoin's going to go down and it's going to have one of its more typical corrections of 80-something%, right? That's kind of a good neutral take, right? But the question here remains, has Bitcoin even gone through that? Has Bitcoin gone through a typical 80% correction? And so far it hasn't. I had this drawn on my chart here just to kind of showcase a ballpark estimate for where we could go. But right now, we're just at a 72% correction here for Bitcoin from top to bottom, right? If you wanted to drag it out here to the lows that we had back in June, if you thought that was the actual bear market bottom, you got roughly around 74.5% from the highs, give or take. And while that's still a very big correction, people really misunderestimate just how much of a difference here we can start to see in price when we go from a 74.5% correction to an 84% correction. It's about 100% worse in this case, essentially meaning that you'd be able to buy twice as much at that 75% correction, at the 85% correction versus the 75% correction, right? So again, at a bare minimum, we should be looking at historical indicators here. And that's not even talking about whether or not this is going to be worse than the typical corrections. This would be the weakest bear market correction here, or on par with the 2018 correction, roughly speaking, if we came down to $10,000. So again, we should be at a minimum looking for an 80% plus correction according to history. So looking not only at momentum indicators, but on top of that, looking at previous signs of distance decline in bear markets. And the same goes for bull markets. While bull markets can vary to a degree, we should know, roughly speaking, market structure here, how the charts looked during the tops of those bull markets, how much percentage gains they had, so we can start to build estimates and ranges, so we can start to know when it might be good to take a little bit of chips off the table here if we really need to, right? So those are two key things here so far. Now, one big thing that I know is on the minds of a lot of people, and they take a look at the S&P 500 and they take a look at the NASDAQ, over the past couple days, there's been a big pop up here. After the CPI report, after gapping down, after the recent CPI release for September, we saw stocks pop up big time across the board. And while it's been a volatile couple of days, we have continued to charter higher here, back to where we were, say, in late September, or back here in June of 2022. And a lot of people are wondering whether or not this is a time to start going long. Market's obviously moving up here over the past couple of days. We don't want to miss the dip, right? Well, as much as there are some great rallies here, guys, just like there was back here from June to August of 2022. This was a summer rally that, again, we realized here in mid-July. We said to take advantage of here, start taking profits, and so far that was a really good decision for us personally. As you all know, we made a major move to cash, but I want to go ahead and talk about why it's not good to chase dips. As you all probably know, as I've talked about here on the channel, it's not about just simply buying the dip here, because there are a lot of opportunities where it might have looked good to buy the dip, right? So if we, for example, saw it here, you might think, hey, this is an opportunity to buy the dip. But if we play over time, we can see that price continued lower here, right? Continued to move lower and lower in price here. And again, as we saw another bump up here going into August, we rolled right back down to new lows. So what's my key point here? My key point is that instead of chasing lows, we should look for indicators that signify risk on activity. And on top of that, we should see within price the signs that there is risk on activity, meaning higher lows and higher highs, okay? So let's go ahead and run through some of these here, right? Another great momentum indicator that I look for here is Bitcoin divided by the NASDAQ. Now, Bitcoin divided by the NASDAQ will show me one of two things. Either Bitcoin is printing newer highs against the NASDAQ, signaling risk on activity, because while we might think Bitcoin is a hedge, we can throw any narrative we want at it. Essentially speaking, the broader market sees crypto as an emerging asset class, and one that is much smaller than equities, that has much greater growth potential, but also much more severe risk to decline. Now, during bull markets, Bitcoin, or bullish periods of time, whatever label you want to toss at it, during those bullish periods of time, Bitcoin is accelerating higher than the NASDAQ. And we've seen that for the last decade here. This has become a growingly relevant indicator as Bitcoin's multiples have started to decline here, because back in the day, it was just so absurd how much Bitcoin expanded. But again, sticking here to the point, take a look at the 200-week moving average, right? Usually when price comes down to this range here against the NASDAQ, we see buyers coming in, taking more risk. This time around, we are seeing clear resistance here. I'd much rather wait to simply buy when we get across of that 200-week moving average. I don't mind paying a premium here because I'm still getting a really great discount from the highs. And at that point, I know that the trend is in my favor. The trend's on my side here. I'm riding with the big institutions or the big hurdle of liquidity that's really going to drive price in either direction, right? And if it means that there's not that kind of buy side pressure, I'm going to sit on the sidelines and wait until that buy side pressure starts to come in, right? Again, it's not so much about picking the bottom here, it's about knowing when to ride the wave. Another great momentum indicator here that we can watch for is the overall altcoin dominance in the market. This excludes Bitcoin and Ethereum, as they're kind of in their own league at this point in a lot of people's minds, as they're well-established plays, and also removes stablecoin liquidity, which we don't really see as altcoin market cap here on the channel. And when we do this, we start to get a real clear picture of what's going on in the altcoin market. We had the huge acceleration in altcoin dominance from here in December and January of 2021 into May of 2021. And since then, not only did we have a double top in altcoin dominance here back in September, but since that period of time, we've been on a decline. We had a small bump up here in June, which was definitely significant, but previous resistance on the other dominance in the market that isn't altcoin dominance, right? This is Bitcoin, Ethereum, USDC, USDT. That is now serving as support. So to kind of think about it this way, if you want to view it in terms of the altcoin market, right, you can see we did an inverted scale here. This was when altcoins were doing very well, and now we're setting in a continued trend of lower highs here and lower lows on the longer term time frame, right? It's not exactly clean, cut, and dry, but you guys catch the gist here. We are on a downtrend, and that previous range of support back in June and July of 2021 during that first major mid-cycle correction, many of which said was the top in the market, right? Now we're starting to use that as consistent resistance, and that shows me that there's a lot more bleeding to come. And the reason why is not only because of the fact that this is acting as resistance, but because we have got a clear lower range here that is much further than where we are right now, down here to 80% plus dominance to potentially 90% dominance for those 4 leading cryptocurrencies, meaning that if those coins still have room to gain dominance, if there's going to be a sell-off in the market, if there's going to be further decline, that means that altcoins are going to get hit even harder here. That's the only way that dominance gets expanded here for these plays, unless we're in a completely opposite scenario where we're really bullish on the market and altcoins, again, just aren't providing that much strength. So these are some key telltale signs here. And again, while I'm very much focused here on the altcoin market long term, you guys know I'm looking for these plays. I think we're going to have some great dip buying opportunities when we get down into this metric range, right? That's where we could start to see some value, because that's historically where we've started to see the periods of time when it's time to go long on altcoins. When these large plays make up well over 80, 85, 90% of liquidity. Right? And even with that, though, again, I'm not looking to just buy the direct dip. I'm looking for the trend to start showcasing strength. As we talked about before, we got to follow that system. It's not just about picking what you think is the bottom. It's about riding the wave and knowing when it's time to go long, letting the market tell you the standards of when it's time to go long. Now, I want to go ahead and share one quick thing here, guys, and that's some details around our partner here on the channel, one of the layer 1 blockchains that we're watching, Kava Network. Now, if you guys haven't heard about Kava yet, they're one of the few exciting protocols that I'm looking to get when we get back into this range, when we start to see the signs of strength here, all right, in price, when we start to see those higher lows in price, they get me very excited. That's the kind of stuff I'm looking for here. Now, for those of you who haven't already followed Kava Network on Twitter, you can do so at the link down below. But they just shared an important announcement back a couple days ago that the Kava 11 liquid staking network upgrade is officially set to launch on October 26th of this year. So the team is continuing to work hard and make sure that the launch moves smoothly, make sure that there's no critical bugs. And if this launch goes well, this could be really good for Kava Network in the long term. Yet again, another sign that they're continuing to build in the bear market. A big reason why this is valuable is because it not only allows you to earn staking rewards on your Kava tokens, but outside of that as well, be able to utilize your bKava tokens, your IOU claim on those stake tokens in various DeFi protocols as a form of per se collateral, or as a token that you can swap between other types of assets. So again, it's a really exciting thing. I think it's going to be exciting to see how the launch goes, especially with some of the major partners and protocols that they've been deploying. They've also got as well, launching at the beginning of this month, the Kava 11 liquid testnet giveaway. So testnet is live at the moment. So if you guys want to participate and potentially earn a huge amount of Kava tokens, then I definitely recommend you check out their Medium article talking about this very topic. There's some key instructions here on how to participate and how to be eligible for it. It's quite simple. You just got to fill out the form with your address and participate within the testnet. They're going to be giving away 10,000 Kava tokens, 25 tokens for each participant. So 400 of you could be very lucky winners. Again, consider participating. It's free to enter into, and you just got to participate within the Kava network itself. But they've been continuing to push some major developments on DeFi Llama becoming the 15th network, largest by TVL or total value locked within their protocols. So I love seeing these kind of developments. It's the same with Radix and a lot of these layer ones that have got me really excited for the next cycle. They were a big focus point. Layer ones were a huge focus point, as well as layer twos. Alternative protocols were a huge focus in this previous bull market. And I don't see that topic going away in the next cycle, especially if networks like Kava or Radix are offering really interesting ways to do things different than that of the Ethereum network, with Kava in this case offering the ability to pair in the Cosmos SDK and the Ethereum virtual machine. But anyways, guys, check out the link down below in the description if you're interested in that. But I just want to go ahead and wrap up this conversation here. We talked about a lot of different things in today's video. First off, looking at historic signs here in previous bull markets or certain indicators in bull markets that get us excited and showcase risk, and looking for the alternative during bear markets, right? Trying to see whether or not those same indicators which previously provided support are no longer providing support. A great example of that was the 200-week moving average. You guys can set that up on TradingView. It's very simple. Just search up moving average, set it to 200 as the value, and turn it to the weekly time frame. It's really simple. It's a great tool to use, and it's utilized in traditional equities as well. The same exact case can be used for equities that we've dipped below the 200-week, and we're starting to see that this metric that usually served as a buying range for the past 10 years is starting to serve as resistance. Second thing as well, just to close off here, is looking for previous historic signs, looking for typical ranges that we usually see the market decline here. And at a bare minimum, in the case of Bitcoin, if we're going off of history, Bitcoin would go all the way down to $10,000, going off of its typical percentage declines. That's if it's the weakest or on par with 2018. And last but not least as well, looking for momentum indicators like our custom altcoin dominance metric, and outside of that as well, looking into things like the Bitcoin to NASDAQ ratio. Utilizing ratios and measurements can really help to gauge market momentum and filter out a lot of the noise and emotions that just a simple price chart alone is going to give you. But anyways, that's it for today's video, guys. I've rambled on a good amount. If you enjoyed this video, the best way you can support it is dropping a like. Let me know your thoughts down below in the comments. But until the next video, everyone, thank you all so much for watching. I hope you have a fantastic rest of your day, and I'll see you all in the next one. Take care, everyone.